I just wanted to move on just so we can get through the 10 points. The next one is sort of a quick one, tax benefits. Your accountant. Everybody has an accountant, I assume? Everybody loves their accountant this time of year. It is accounting season after all, right? Okay. There's two things that your accountant can do for you. One thing that your accountant can do for you is he can just say, here's what you made last year, here's what you deducted last year, I'm going to put it all together on a return, and here's the check that you have to pay. All right? The other thing that your accountant can do is be acting for you in a very consultative role, because nobody knows your business better than your accountant from a tax perspective. All right? Your attorney doesn't know them, and you probably don't even know your business that well. I can tell you they don't, because accountants have to have 40 hours of continuing education credit every year. So it's 120 hours every 3 years. And the reason for that is they keep changing the tax code all the time. So in working with your accountant, one of the things that I think business owners can get a lot more value out of is to sit down and have a conversation of, okay, here's how my business has been operating. What is there that I could maybe be doing differently to take advantage of certain tax laws that might be out there? Are there credits that are available to me if I structure things slightly differently? If I change my form of business, I want to put in a pension plan. I want to be able to overfund it for my benefit. So your accountant might say, well, if you're a C corporation, you can do more funding than you can as an LLC. Then you have to look at, do I want to be a C corporation or not? So there's different ways of doing things, but in working with your accountant, that you have a consulting relationship with them, as opposed to I bring my bag in the middle of March and I drop it off and then they prepare some forms with me. Because there's a lot out there that's available to most businesses that they're not aware of. And as business owners, I mean, I'm a tax attorney. I can't keep up with all the income tax changes. The changes in depreciation schedules and da-da-da. Nobody can keep up with them. But the question, if you only see your accountant to look at what I did retrospectively, you're not going to get any real value out of their knowledge. Their knowledge is, how do I prospectively change how it is that I'm doing things to be able to keep more of my money. You're allowed to pay your legal minimum in taxes. That should be what your goal is. You're not allowed to pay less than that. They get very upset at that. But you're allowed to pay your legal minimum, so why wouldn't you want to do that? And I think a lot of business owners, they don't take advantage of it, or they do it in the wrong way because they heard their neighbor say something about, oh, well, I can deduct this because I have a home coming out of my office. And it's a lot more complicated than that, because what nobody wants to do is you don't want to be audited. Because what happens when you're audited is when you own your own business, you're getting 2 audits automatically. Because if they audit your business, they're going to audit you, and if they audit you, they're going to audit your business. That's just what ends up happening. So now you've got to deal with that. But if you were wrong on any of what you thought was a deduction, you have to pay interest and you have to pay penalties. And I know they have these places on TV that they do the offers and compromise, and you pay 3 cents on the dollar for your taxes. Real life does not work that way. People who spend 3 cents on the dollars on their taxes end up wearing orange jumpsuits and are in very nice country club-like penitentiaries in Connecticut. And we represent them. And I don't know why, because I'm like, if you don't pay taxes, how are you paying my bill? But that's a whole different thing. But you know, to make sure that you're really getting some good advice out of your accountant, I think is critical, because there's a lot that you can do to keep more money in your pocket that way. Next, I want to turn to contracts. Any other questions so far before I get to contracts, which are so near and dear to my heart? Okay. Let's talk about contracts that you're giving out, okay? Make sure that you can get paid on your contracts. Who here has been stiffed by one of their clients? Anyone? Anyone? You guys are very good. You haven't been stiffed by your clients at all, because goodness knows I have. A lot of times, how does that normally happen? In a service-related business, one of the ways that we see that people end up not getting paid in a service-related business has to do with what I'm going to call scope of work. All right? I told you that I was going to bring somebody and that we were going to do some caregiving services, and we were going to do caregiving services for 4 hours a day, 3 days a week. Okay? So now the caregiver's there in the house, and the daughter comes in and goes, oh, well, can you stay a couple of hours here? And oh, can you stay a couple of hours there? And at the end of the day, you actually bill for the time that they worked. And then the daughter goes, hey, no. The contract says that we only have to pay you this amount of money, not this other amount of money. I thought that, you know, you just really liked my mom and that's why you were staying around, or something along those lines. Or some other kind of scope slide that we see. If you ever see contracts and they have what I call a statement of work attached to them, I like that, because here you have the contract with all the legalese, and you got that down pat. You don't ever want to modify your contract at all, because here's our standard contract. But you can always attach a scope of work and say, here's what our contract terms are, but here's what we're actually doing for you. And you attach the scope of work and you say, okay, attached to the contract, here's what we're going to be doing, here's what we're not going to be doing, the services that are not included in this. Here's how the pricing is going to be affected. And you could sort of do that in what I'm going to call English as opposed to having it in lawyerly terms, because you just negotiated the deal. You know what you just agreed to do, but you have the actual contract then to back it up. And whenever you're going to change that scope of work, in your business, the rule is it gets changed in writing, okay? A text message is not a writing. An email can be a writing, okay? Yes, an email can. If you say in your agreement we can change it by email, but you have to say who it needs to be authorized by. So it might say in your agreement that, you know, an email is acceptable so long as it's authorized by and it needs to be sent, you know, C-Coloff or whatever the case may be. You can do it that way, but it makes it so you can have a good, strong contract, but that your contract doesn't get in the way of your business, because your business is what you just negotiated. But by having the scope of work, you can avoid the scope slide issue, because you have to then say, all right, well, you only asked me to do these 8 things, and now you're asking me to do 8A and then 7B and everything else, and that wasn't in what we talked about. So I'd be happy to do it, but here's what the price is going to be. But if I don't do it, you owe me for the work that I did right now. Because the dispute gets into, you didn't finish the job. You didn't do what you told me that you were going to do. So you take that away by having a very clear, here's exactly what we're going to do, and here's what we are not going to do. And if we're going to do anything else, like add a couple of hours, we would be delighted to do that, but I need you to sign off on this that we're modifying what the hourly schedule is, if that makes sense. Huh?
We've been lucky so far.
Yeah, no, it's, oh, there's lots of people. You know, there's lots of people who'd like to take whatever you do and then not pay you for it. There's a whole host of people out there that would love to be able to do that. So that's one thing, is having a scope of work on your documents. Payment triggering events. If you're not the kind of business where it's very clear when it is that you get paid, like I assume you deliver stuff, you get paid. It's a little bit clearer, right? Okay. Some people, it's not like that, because you've completed stages of a project, or you expect to get paid every 30 days or whatever the case may be. You need to be very clear on what your payment is. If you can possibly do it, I like retainers, because once people have actually started to pay you money, they're going to be more likely to continue to pay you money. People who won't give you a retainer are unlikely to pay your bill on the back end. And then it's a question of how much are you going to do to go chasing after actually getting your money or not. So to have some payment triggering events. Yes, Chris?
There's a couple web developers in our lives, and what we suggest them is they accept prepayments versus deposits, because web projects tend to go in stages and can die on the vine a little bit. So if they can get a prepayment, it's a little different than a deposit. Is there something you can address?
No, it's the same as a non-refundable deposit. I mean, what you're or you do it in the scope of work and say our design services cost $3,000, and the design piece ends when we deliver to you our initial, whatever the case may be, plus one revision, whatever it is. And if you haven't finished that revision within 14 weeks, we still reserve the right to be able to bill you. So something along those lines to say, here's where it is, but I'd even still get a retainer up front. And then the question is the retainer like a security deposit, or is it an actual payment? If it is a payment, it should say, here's the services that it's in payment of. And I would tie it to, you know, the first element, because you're going to do, in my example, the design work no matter what. You're not going to, because it's, in that kind of thing, it's the client that's the issue, because they're just not going to get back to you with any changes. But as long as you complete your piece and then you get paid, something along those lines. But to be really clear, because it is in those service businesses where you have an issue. Yeah, Kathy?
I acquired a company last spring.
Okay.
So we inherited their contract.
Oh, I'm sure you did.
But it's occurring to me that we never really reissued contracts for those clients under the IT rate's name. Are those contracts even valid?
Oh, no, they're valid, because I'm assuming when you bought the company, you did an assignment of all their assets, and one of their assets was the contracts. So they're valid. You just may not like what the terms are. Because a lot of times we see contracts, and look, if you're trying to sue to get your money, you need to be able to prove to a third party what you should have gotten paid. And if you can't say what you should have got, if a judge can't look at it and go, okay, well, under the terms of this, you were owed this, and here's the time that you worked and everything else, it doesn't exist. And you can be right as rain. The courts are not about justice. They really aren't. The courts are about how do we solve what the agreement was between the two people. So, you know, you need to look at the payment terms. under these contracts, do they have a period of time in which to pay? Are they charged interest if they don't pay within a certain period of time? If you have to collect on it, are you allowed to collect court costs and attorney's fees? In New Jersey, if you don't say, I'm also allowed to collect court costs and attorney's fees, then that money is coming out of your pocket, not coming out of their pocket. You want to put as much money as possible into those, because eventually you want to settle with the person. If they owe you $10,000, you might be willing to take 8, but if they owe you $10,000 and because of interest and everything else, now that it's up to 12, they're more likely to come back at 8 as opposed to coming back with 4, which is going to end up with more money in your pocket. Or if you do need to take it all the way and you do need to be able to then sue about it, that every day that they're not paying you, you're getting paid, because what they're doing is they're using you as their vendor, as their bank. All right? Anyone here have trouble getting bank financing recently? Yeah? Okay. Well, let me tell you what they're doing. Your vendor bills, I bet you used to get paid in like 15 to 30 days, then it went from 30 to 35 days, and now it might be more like 90 days, maybe 120 in some cases, depending on how lucky you are. What your clients are doing is they can't necessarily either get bank financing or they're already using it for something else. They're using their vendors as their banks. Is anybody here actually in the banking business? No. So, you know, one of the things for small businesses then is to tighten up your ARs so that you're going to be getting cash out of them more frequently. And that's by taking prepayments or deposits, by having these triggering events for billing, by having very strong terms and unapologetic. If you don't pay me, this is what happens, because I deserve to get paid, because otherwise I'm going to take my time and resources and work for somebody else that's going to pay me to do something. So that's my on contracts that you give. Any questions on those? All right. On the flip side, contracts that you get. So now you're the client and somebody else is the vendor, right? You want to be able to get out of those contracts. I can't tell you how many times I see clients that they've signed, you know, these one-year term contracts, and with no exit clause for if the person isn't providing the services that you want, or they're not providing the services up to par. And now you're like, okay, well, either I can, you know, litigate with them to get out of this contract, or it's going to be cheaper for me to keep paying them. So now you're paying your very hard-earned money for a service that you didn't like in the first place, that they aren't really providing to you up to what your standards are. That doesn't make a lot of sense, all right? So in your contracts, make sure that when somebody else is the vendor, you can leave the contract at some point in time. Have termination provisions, whether it's for cause or because they haven't returned your phone calls or whatever makes sense under that particular contract to be able to do it. Renewal clauses. I see a lot of contracts. If we don't do anything, then it's going to renew for another 3 years. Well, no, you don't want to renew for another 3 years. You can go month to month, and then it's up to the vendor if they want to keep you long term to come back to you. Because, you know, Kathy, in the businesses that you're acquiring, one of the things you acquire is their contracts. If your contracts are month to month, they have zero value in a sale. So a person is going to want to be able to have more long-term contracts if they're a service provider. So have them come back to you if they want you to be under a long-term contract. Maybe you can renegotiate the price. Maybe you can do something a little bit better. Maybe they can give you better service for the same price. But to just have this contract that goes on forever and ever and ever, where you're paying for it and you really have no opportunity to revise it at all, just doesn't make any sense, particularly in this economy when there's likely to be lots of people out there that might be delighted to have your business. You know, in terms of the contracts also, not to agree to something that isn't relevant for the service that's being provided. I see a lot of contracts that have a random non-compete agreement in them. You know, I'm going to provide you with financial analysis services, and you agree that you're never going to be in the financial analysis services business. And I'm like, well, what if I want to in the future? Just because I'm using you as a vendor doesn't mean, I may think you do such a good job, or actually you may do such a bad job, I end up having to learn how to do your job, and I may then want to sell that service to somebody else. So sometimes I also see contracts that people enter into where they've agreed to all these terms that aren't relevant to what they're actually getting at all. So that the contract's narrow to what the service is that you're actually expecting to receive. And the same things happen. Do we have times for when we're going to get paid? The scope of work works the same way. You want to make sure the scope of work includes everything that you want as opposed to excludes things that you want. To be able to put it together. And if the person doesn't have a contract, make up your own and be delighted to give it to them. Say, fine, for all my vendors, here's a contract, I have them sign, and we have the statement of work for you, particular vendor, what you're going to do, but here's the agreement that you're going to sign. And in that agreement might be the independent contractor language to make sure that you're not an employee, that you're going to pay your own taxes, that you have your own employment insurance and things like that. So you can have sort of one standard form of agreement for your vendors as well. Anything else on contracts? Yes?
Let's say there's a contract and there's a certain agreed payment, come out
Right.
and, you know, you agree off paper to have it be different. And so for a year or so or more, if
Right.
it continues off contract, does a precedent then take place?
It does in terms of facts and circumstances, because why did it change? Because if I was paying you $10,000 a month and now I'm paying you $8,000 a month and I've done it for 12 months and you haven't said anything about it, well, it looks like it might have changed. The better practice, though, is even if you don't go to the detail, is to send like a memorializing email. Hey, we just spoke on the phone. I just want to send you an email, just to say we were paying 10. We're now going to pay 8. We're going to do this for the next 12 months. Then we'll get back together in 12 months and look at the pricing again. So a 3-sentence email, because it was sent contemporaneously, is going to really buttress the value of what the facts were in your situation over that period of time. And it can be one way, because the value of it is that it's contemporaneous to the conversation. Because again, if I didn't agree with you, wouldn't I send an email back going, no, you're wrong? Does that make sense? As opposed to, well, my bookkeeping department just didn't catch they were paying me too little. That's the problem that you get with just the change of payment without any other communications absent it. So, yeah.
Let's say you have a contract with a client and you have a certain compensation structure in place, and then you decide to revise that.
Right.
You've already agreed to billing terms, you already have billing set up. What do you have to do? Do you have to get that in writing again in order to update?
Yeah, and that's why I like the statement of work, because if you're not familiar with what that is that you have your full contract, and you say that for the scope of services, see the statement of work attached as Exhibit A, right? And that can be a one-page thing, again, written in English. So now you're going to be modifying it. You just do an addendum to the statement of work. And it makes it very easy because you don't have to. The formal isn't bad. The formalization of a contract is great when you get into a problem. Look, if you do services and they pay you and you never have a dispute, nobody needs contracts because it doesn't matter at that point in time. But to be able to have a statement of work as a concept, I just think it makes it easier for you as a business owner, because you don't have to keep going back to somebody else, or they don't say, oh, well, I have to have my legal department look at it or whatever it is. It's a one-page, okay, instead of us doing 4 splash pages, you want us to do 6 of them. And that's going to change it, and now instead of being $4,000 it's $6,000. You sign it, they sign it, it's a one-page thing, and it just amends what your work terms are without amending the body of the contract, where all of that, interest and payment and disclaimers and liability waivers and things like that all exist.
Do you recommend that even if the actual scope of work doesn't adjust?
I'd even, and like I said, a memorializing email is a beautiful thing. We just spoke on the phone, you asked me to do this, I agreed to it, okay, no problem. Because you have a contemporaneous trail of what happened. Because again, any legal dispute, litigation, it's all about what was said in the past, what paperwork exists, what documents are there. It's not really about what your recollection is as much as what can I touch and feel in terms of looking at it. So a quick little memorializing email as a habit could just put you in a much better position going forward, and it takes 30 seconds. So when you get off the phone. Questions on contracts? All right, so we're moving off of Contract Law 101.